So let us start after the ample discussion with Bruno on the original sin. Europe needs larger banks to compete, but when banks move to get bigger, they face political interference amid little support from European institutions. Do you agree with this statement, and what should CEOs do?
Well, I think there's no doubt about that you're right with the statement, and what should CEOs do is, basically the topic we started to discuss here, you discussed with Bruno, is absolutely critical. I said we need more banking union, we need more capital union, and we need stronger banks in Europe. And it's also the role of a CEO really to help and to explain and to almost go a roadshow whenever they meet that this is the only way how Europe can be competitive between US and China. And even a CEO of a bank always needs to take this perspective, where is this market, and to make sure that the European market is our market here in Europe. And yes, there are problems and discussions, but the CEO need definitely advocate and promote European and capital banking union.
So if we do need change, why is it not happening?
Well, I think from understanding to execution, there's always a huge problem. I think we can easily agree on what is important, but then the question is, why is it not happening? And we see it on the political field, but we also see it in corporations. And sometimes you need a huge crisis to move. When I joined Commerzbank, the bank was in very bad shape. There was a failed merger with Deutsche Bank. The bank lost almost 3 billion a year, and then you can move something. Or when the situation in Europe is really difficult with COVID, or you have the Ukraine-Russian approach, then things seem to move. It's almost like human beings don't like the change, and only if they're against the wall, then they start moving, and that's not okay. I think we need more leadership on the political, but also on the business side to make the next necessary steps. We shouldn't wait until it's almost too late.
So before I asked Bruno if he could redesign the EU, how he would do that, I'm asking you another crystal ball question. What does the end game of European consolidation look like to you?
Well, first of all, we need to understand that only a stronger Europe is our only way between US and China. Now the Commission has finally competitiveness as their number one priority, but are we really pushing enough for that? And if we design Europe, we need other decision-making processes, and I think we need a strong leadership. And when we look back to our fathers and grandfathers, when they established the European Union and made the first steps, we saw strong leadership between the French and the German politicians really to bring that ahead. And sometimes it's now a time not for technocrats, now it's also the time again for political leadership. And it's only the politicians who need to drive the Commission and Brussels into that directions, and that's absolutely what we need. And when we look at the landscape of banking, at the end, you will have one strong Italian bank, you will have a strong French bank, you will have a strong German bank, you will have a strong Spanish bank in the landscape of strong European banks. I think there is enough room in Europe for the banks that at least, despite necessary consolidation, that each member state probably will have a strong bank playing in that field. But again, from understanding to execution, and this is what separates the one who talks from the ones who deliver. And I think this should be the main focus, and I think I'm sure that the politicians now understand this is the last call, at least in my country, it's a last opportunity to prevent really populism to take on the leadership role. And it's not that the population votes for populists because they think this is the best thing, because they're so disappointed with the progress and the level of execution. So let's call for execution, and I like the idea of go fast in Europe, but it's also true for each CEO and each business leader in their own company.
So, and within this dynamic, do you think regulators and supervisors have been more of an obstacle or a facilitator of the process?
Well, there's no doubt about that. I think after the financial crisis, that the regulators and the supervision really helped to stabilize the system. I mean, there's no doubt about that. But as always, sometimes it goes overboard, and now we have too much regulation, too much bureaucracy. And when I'm thinking back of my time, I always said, okay, what is the next step of Commerzbank? And I said, I need to earn cost of capital. I have international investors who are asking me to earn more than cost of capital. And simply they do not understand that. And they were not even interested, and they don't care. And that is a problem, because as a CEO, you need to satisfy your investors. You have all your stakeholder groups. But if your regulator and supervisor doesn't understand that you need to earn cost of capital, then we have a massive problem. I mean, they're asking for even more people in risk management, in compliance, in AML. I mean, this is all important. But at the end of the day, you can also attack this problem by using technology, by making AI as a possible tool in order to stabilize and to improve risk management, compliance, and AML. Because when we ever see we have problems, they're mostly man-made. I mean, and technology can help. So the answer is not put 100 more people in risk management, 100 more people in compliance, 100 more people in AML almost year by year, but making technology useful and helpful in this area. So the bottom line is, yes, after the financial crisis, a good stabilization of the system. The banks are now resilient. The capital situation is strong, and they can really survive any crisis. If there is an issue, it's an issue always of liquidity and not of capital.
And just following up on that, I'm curious to ask you, if board of directors tend to lean more on complying with the regulator and the supervisor, or if they do understand the returns above cost of capital requirement?
I mean, it's also a question of leadership. The natural approach right now in the board of a company is dominated by fear, defense, and sometimes even mistrust. So, I mean, they're always asking you, oh, Manfred, what can go wrong? Oh, I'm worried that this cannot happen. So we are now in a time where protection, defense, and hopefully nothing goes wrong takes over innovation and entrepreneurship. And in order to make Europe and your companies more competitive, you need more forward-looking, risk-taking entrepreneurs instead of only backward-looking compliance and risk managers. It's totally fine. We need a safe and sound risk management structure that is clear, but I think we built this. So now going forward is what we need is we need courage, we need innovation, and we need risk-taking. And this, over the last decade, has really pushed away. And when you sit in the boards, everybody is scared if you take a new initiative on the table. I mean, they're asking law firms, if anything goes wrong, are they really protected? They think of their personal liability in the board instead of supporting the management team going forward for innovation and support also the risk-taking. And of course, something might go wrong, but that's not then the first priority to sue the management team in order to learn from the mistakes and go on. And I think what we need is more this entrepreneurial innovation, forward-looking change of the business models. I mean, the technology is not waiting, that we overcome this backward-looking, protectionism, defense play. And I think we need more from that. We need innovation, and the banks are the ones who need to finance the transition. I mean, they are capable of giving the push that in the modern industry we see growth, we see innovation, and that's our role. I mean, we serve as a machine to support this growth. I mean, that is our role.
And just connecting to what you just said, you had to manage a tough turnaround while continuing to hike capital ratios and abiding to mounting regulations. What did you do, and what do you think is left to be done?
I mean, first of all, we needed to stabilize the balance sheet, and we need to protect the capital, and we need to bring the cost down in the first place. And here again, it's all about speed. So when I asked first my team, okay, how long does it take to make a contract with the unions? They said, well, probably 24 to 30 months. And I said, okay, then this bank will be bankrupt. Okay, so, and then I said, I want to have this agreement with the union within 8 weeks. And the lawyer said it's not possible. And I said, I want this, and I will stand up at the AG in May and explain that we have a deal with the unions. And it worked. But again, here it requires personal leadership and courage, and also to take the risk by announcing in a public manner what you want to do, despite that everybody is telling you that this is not possible. And I think this kind of risk-taking attitude and the speed, we don't have time in a bank which has a problem to negotiate 2 years with the unions, because then the bank is bankrupt and the customers are not waiting for that. And we also have now an obligation for our customers and the employees to move fast. The same way like politicians have an obligation for the European citizen to move fast right now to make use of this crisis. So we had in the first place to strengthen the balance sheet, the profitability of the bank, and so we started with less than €3 as Commerzbank. When I left, we were at 15. We started with a loss of 3 billion. We made 2.5 billion, and we paid dividends and returned capital to shareholders. So yes, you can do that, but I mean, you probably cannot, and you should not listen to all the people who always tell you, oh, this is dangerous, this is not going to happen, oh, we will never do this. So and you're alone with this. So there's nobody who's really on your side, and I think you have to live with that, and then being alone, but also courageous, doing it, and then you can deliver. So what's now on the table is the next step of building the business model, making use of AI, transferring the strategy to the next level, and again continue to deliver what is promised. I think this is the most important. When we managed the turnaround at Commerzbank, we basically delivered each quarter, and we kept our promises. We said what we're going to do, and we were not scared of measured against what we said. No matter what happened in the world outside, and there are always changes, uncertainties, you need to deliver. There's no excuse for failure, and there's no excuse for not delivering. And that's true for managers, but I think it's also true for politicians.
So going back to your experience, can you explain us why did 2019 merger talks with Deutsche Bank fail, and what might have changed since then?
So I wasn't there when those discussions. So I think at that point there were two weak banks. By the financial crisis, they were not strong enough and stable enough. So what has changed now? I mean, that Commerzbank has significantly improved the profitability from. I mean, they were 2.3 times book, and now they're valued 1.0. I mean, at that time, they were about 25% of market share of Deutsche Bank. Now they're at 68. So, I mean, they have really going through the turnaround. The bank is now a lot stronger and stable. and is a bank of the German economy. I mean, you shouldn't forget that Commerzbank is financing more than 1/3 of the entire German export worldwide, goes over the balance sheet of Commerzbank. So it's a highly relevant bank which is necessary for all the German SMEs, for all the jobs and the export of the German industry. So now the bank is definitely stable.
How do you think the 1 trillion euro investment plan by the German government could change the landscape in your country?
I think first of all it's good that the government has put out this. This will hopefully help to speed up all the necessary projects, and it's almost like, yeah, there is an internal blockade is taken away. It's like a mental break which is now taken away, which go ahead. I hope they can even spend the money necessary in the way, so I have my certain doubt. But I would turn this a little bit away from the point that the first solution is always public debt. I think we need more private money flowing in all the projects in defense, infrastructure, and energy, and only with private money, and that's why the Capital Markets Union and Banking Union is so important. Only with private money we can really solve all those issues and manage the necessary transition ahead of us, the digital one, the energy, the defense, and the infrastructure. And therefore also, I mean, when you talk with investors, they're saying, okay, we are willing to put a lot of money there, but the returns must be necessary. So when we have an infrastructure project, they ask for a return of 10% or 12%. Is it possible in an infrastructure project? So more private-public partnerships, interesting projects with good returns, then we will see more money flying in. But again, here, it's from understanding to execution a long way. And yeah, we all need to advocate for this, and also the fact that private money is necessary for this transformation. And I think Bruno just put a very important point on the table here. It is the public opinion. Public opinion is against banking or capital market union, and it's against private-public partnerships, because they always think the bankers just want to increase their bonus. I mean, it's not the case. We are the one mobilizing private money by deeper capital markets union, helping for growth and welfare here in Europe. And the future of Europe can only be built on the completion of the private and capital markets union. And it's not for more always the interest of the bankers or the managers. And to help to change this public opinion, I think it's a task of everybody. It's a task of the politicians, but it's also one of the most important tasks of the CEO of the banks in the industry to help also to change this narrative. Why is it necessary for the welfare and the future of Europe to mobilize private capital? And this should be the number one priority of Mr. Merz, Macron, and Meloni, and we need to do everything that they take this narrative and explain to the public. It's not the bankers who want to, improve their salary. It is good for our countries, and it's good for Europe. And to build this narrative and to put it in the head of the states, I think, is a task of everybody.
I'm curious to follow up from this. We're approaching 20 years from the great financial crisis, and yet introducing taxes on banks everywhere in Europe is still very popular. Banks are disliked. What can banks do? What's going to take for banks to be taken as normal companies?
I think we need to explain what the bank can play of a role. I mean, look at your bank. I mean, your bank is so systemic, relevant, and critical for Europe, but also for Italy. I mean, it helps the Italian industry. It helps the growth of this country. It supports so many industry and industrial companies to be able to invest and to grow. I mean, your bank is just the best example. But also my bank, my bank is, we are the facilitators of growth and at the end then of welfare. I mean, if we have less capital charges, less bureaucracy, the more money we can put into innovation. If we are almost have to think with any credit or money we give, okay, how can we afford where we are? Do we have enough water to breathe? Then it is a problem. And I think that's why we all need to explain what a bank is really doing for society and the economy. It's almost like the heart machine or the heart pump of an economy. And but I think we probably need to tell the story more in pictures and in easy words that the public opinion better understands why a bank is not bad, why a bank is really helpful for economic welfare in the future. And I think we probably were not successful in explaining what we are actually doing.
And getting to your new role, you recently repositioned in the crypto space, which is a topic I'm very fond of. Can you share with us what brought you to this change and why? What do you see in crypto?
It was an interesting journey. So when I stepped out of Commerzbank and after more than 30 years in service in the corporate world, I was say, okay, let's do something else. And there were two topics I was interested. The one was the entire crypto and digital asset space, and the second was technology. Because when I had customer meetings as a CEO of Commerzbank, which I did every week, about 10, 12 meetings, there was not one meeting where the customers didn't ask me, can I buy Bitcoin with you? What do you think of crypto? Why is your bank not offering anything in this area? Is digital assets now an own asset class? And if you like it or not, customers are merely deciding. And if you don't offer it at the bank, they go to the neobanks, they go in Germany, they go to Bitpanda, Trade Republic, Scalable, and all the others. And the next generation of entrepreneurs or their children, they invest. And they then take also the entire banking relationship to those banks. So I think the banks are very well advised to position themselves and in a portfolio of diversification also offer this kind of asset class. So I was naturally interested because I wanted to learn why is always as customers are so interested in this. And if you see that they're less correlated with other asset classes, and even in times of uncertainty, this asset class holds very well against others. So I was naturally interested. Then I was at a conference in St. Moritz in January where the community came together, and I thought there is a huge potential of very good entrepreneurs and young business leaders with new technology. But they almost live in their own bubble and they don't bridge to the old world of financial institutions. So now I'm serving a little bit as a liaison officer between these young entrepreneurs with new technology and the old world of finance, and then trying to help them to enlarge their product landscape and help them to bring this asset class. So that's why I think, and then also I think there's also technology in. I mean, if you see in this industry, what's now going is, I mean, they develop new chip technology, they develop new cryptography, and then they develop new technology for better protection. I mean, we just developed new software for the protection against hacking of blockchains, which is also an issue of protecting exchanges, online banking, trading books. I mean, we will see more and more attacks in this field. So working in this technology and working with young people developing technologies to better protect us is something which I like very much for my period of life right now.
And let me ask you, decentralized finance started as sort of anti-system philosophy, so with some contrast with, we call it old finance, or let's say traditional established finance. In the US, they've made a U-turn now, kind of embracing it and using it, in my view, as a shortcut to renovate the US dollar as the global currency, using stable coins as a conduit in the digital world, rather than having to develop the digital dollar via the Fed. What do you think is the end game? Because I find quite controversial the fact that decentralized finance is now listing on NASDAQ and becoming part of the traditional finance world in a way.
I mean, this is an entrepreneurial opportunity. This is clear, and I think this is going to happen. I think, of course, you need a regulation on this. You need to explain what are the rules, how to play in this industry. I mean, this is necessary. I think Europe went a step here, but also the others will do. If this class is developed, I think it's a legitimate, a strong new asset class, which is necessary and which helps. What you will see in this industry, you will see a shake-up in the industry as well. I mean, what you always see, you see a lot of hype going in. Then you will see players who are going down, and you will see players who survive. There will be a shake-up in this industry, I'm totally convinced of. But at the end, digital finance and stable coins will remain an important asset class. And if we are opening this up to institutional investors, but also to retail investors, then that gives, an interesting new asset class, and it offers a lot of entrepreneurial opportunities right now for investors, but also for business people.
And do you think banks are prepared for this change?
I mean, 2 or 3 years ago, everybody said it's probably, okay, we don't even want to touch. But now you see that Jamie Dimon even opened up JP Morgan for Bitcoins, because the customers is always asking for them. I mean, Larry Fink with BlackRock has put up the iShare, one of the biggest growing funds in the industry. I think for 18 months now, there are billions of AUMs in. In the Nordics, it's open. I think last week the UK said they're opening up for retail investors. So I mean, it's customer driven. If you're listening to customers, then I think the banks have no chance. I mean, they either offer this asset class, or the money will just flow somewhere else. And therefore, I mean, of course, you need to explain to your customers it's highly volatile, it's highly risky, and you don't want to put all your money in. But in a reasonable diversification strategy, this offered great opportunities, and I could only strongly advise banks to offer this asset class for their customers, and especially for the next generation, because typically in private banking and in wealth management, the customers are almost pretty aged, but when you're going for the next generation of entrepreneurs and their children, they definitely go for this. And as a bank, you should be open for this. And I think that's an important asset class you don't want to miss out.
Wonderful. We'll end it here. The meetings with the companies start now, and we reconvene here at 12:30 with Intesa Sanpaolo CFO. Thank you.
Thank you.
Thank you.